welcome to this week's episode of ThinkTank Thursday. I am Candy Kelly, and I am your host this week, spending this time with you. On Thursdays, Trainertainment likes to take a little bit of time away from the doing and spend some time thinking. And today we'll be thinking with a great guest who is also one of our 2021 sponsors. So while we're at it, we're going to give a shout out to all the other sponsors too. We have Creative Works, Party Center Software, Schaefer Distributing, Hagar Communications, Simnox, Redemption Plus, Expert Hosiery, and Embed. And then also we have People First, and that is where our guest comes from today. So why don't you introduce yourself and who you are and what do you do and what People First is?
Hi, everybody. I'm Barbara Flynn, and I am very happy to be here today. I am actually the CEO of People First, where we provide various probably back-end services to clients. We provide payroll services, bookkeeping, some business consulting, human resource consulting, benefits administration, workers' comp, all of those things that are kind of back-end to support businesses. We've been around since November 20th of 2000. So we celebrated our 20th anniversary last November of 2020. We are very happy. We're a concierge service. We like to handhold. We like to educate. We like to train. That's our relationship with Trainertainment, because we believe that an educated business owner and team member is going to be able to do more, be more successful in their profession. And I am also kind of a contracted team member with Trainertainment, and I assist them with all of the things that People First provides. So really, it's more I'm working with Candy as a fellow team member and also as a sponsor for Trainertainment.
Sponsor and partner. That's the way. Correct. That's perfect. So Barb's on today because we thought we'd talk a little bit and dive into some of the things that she does with financials. And so you'll see probably a couple of think tanks come out with her. But today we thought we'd start talking about the P&L. And I have a funny story before I even talk about what P&L is. I had a friend who, in my old world of operations, she left teaching and came to work with me and did franchising and operations and those things and training. And, you know, teaching is full of their own acronyms. But I remember walking down and the leader of the brand I was with at the time and I were talking, and we're talking about the P&Ls from the different franchisees and all that. And all of a sudden she stops in the middle of the sidewalk and says, wait a minute, what is a P&L? Like, you guys talk about it all the time, but what does it even stand for? And I was like, oh, wait a minute, we got to back up. So that's where I would like to start today. What is a P&L? What does that stand for? And like, what is the basic, I guess, formula of that report?
Well, that's very funny because let me share a story first before I get into what a P&L is. We actually know somebody in common who's a bookkeeper who refers to it as a letter P, letter N, letter L. not P and L, but P-N-L, 3 letters acronym. But a P&L really is a profit and loss statement, okay? It is also known as an income statement. Okay. So if you hear somebody refer to an income statement, it is actually also a profit and loss statement, okay? Basically, the formula for a profit and loss statement is revenue. You've got your cost of goods. You've got your gross profit. Then you've got your general and administrative expenses. And then you get what's called the net income. There's some other things too with taxes and all of that. Mm-hmm. But bottom line, then the net income is really the true bottom line profit that the company has made.
Okay. So to simplify that any bit more, it sounds like revenue minus all the expenses that can be equals your profits. All right.
Correct.
So you just mentioned quite a few components that make up the profit and loss statement there. So let's talk about those. Revenue, which people will also sometimes refer to as their top line number or top line revenue. So revenue, what is that? All the income coming in? Like,
revenue is all of your sales. Okay. I just met with somebody this morning who thought that their PPP money, which is the payroll protection money, would go there. It is not. It is strictly what you have sold. It is your income, your business. It's kind of like personally, it's your paycheck. It's the money, the gross of your paycheck. It's what the company has made and earned as far as whatever it's producing or providing a service, or whatever. So that's what revenue stands for. It is the sales. It is the what the company is doing. It's the money it is receiving for doing that or for providing a product.
Got it. All right. Another term that you used is cost of goods sold. And some people refer to that, shorten that, and we'll call that COGS as well. Explain what the cost of goods sold is.
Okay. It's funny because I always use my pencil when I'm teaching this in class. Okay. So let's say we're selling this pencil. All right. We need to buy the lead. We need to buy the eraser. We need to buy the little clip, possibly the little plastic tab, the little rubber thingy, the little plastic thing that advances the lead. Okay. All of those are directly related to us selling this product. All right. It has not, cost of goods is not electricity. It's not anything that's something you need to do in order to produce it. It is directly related to this pencil. Those are the cost of goods. So you could have under your cost of goods erasers, lead. You need to buy that in order to then produce this pencil that you would then sell, and that would become whatever you're selling it for is your revenue, but all of the pieces to buy, that's your cost of goods.
Got it.
Okay.
Okay. And then a lot of income, profit and loss statements then go through gross profit. So is that the profit? Like if you just are just looking at that one item of cost of goods sold, and then that's your, gross profit there, revenue minus cost of goods, that's the baseline. But then you just said electricity and water and maybe rent and things like that. So Is that what gross profit is? Gross
profit is taking your cost of goods off of your sales or your revenue. And that now tells me that's my gross profit, right? That's all the money. But now I have other expenses.
Yes.
Right? I have other things.
So
yeah.
We classify that a lot of times as operating expenses. That's what you were talking about. Like if I have a facility.
Right. So it's also called general and administrative. And sometimes that's even broken down a little bit more. I know some people break payroll out and then it's G&A. It depends upon how sophisticated the owner is. I mean, I've had owners that really broke it down more. And I've worked with, where payroll is separated. And then I have clients who just they may not even have cost of goods. If you have a service, if you provide a service, you may not have any cost of goods. I provided payroll service. Before I used a service that generated paychecks, literally payroll is a service, but I had to buy paychecks and envelopes to cut the checks to give to the employees. So when I was doing that, when we first started, we were more of a basic. Now we've gotten more sophisticated. We use software. We don't have to do any of that anymore. But back when I was running my P&L, I had cost of goods for my payroll because I had to buy paychecks and I had to buy envelopes. But mostly a service doesn't have cost of goods unless you want to look at, I think of train entertainment because I do train entertainment's financials. Some of the cost of training, you have to travel. When you travel because you are servicing a client where you've gotten revenue from that travel, then that could be a cost. Travel could be a cost of goods if you are providing a service where you need to travel to a client or travel somewhere, and it's directly related to the sale. Hope that makes a little sense.
Yep. When I'm thinking about a service, where does time fit in?
Time is really when you record on a financial statement, on your P&L, your balance sheet, it's always money related. Time is not money other than through payroll, or if you are paying somebody as a contractor. And we could have a whole think tank on who is a contractor or independent contractor and who is an employee. Yeah. That's a whole other topic. But you can have legitimate contractors, and that's where you would equate that time into money, and that's what would be on your profit and loss statement.
Got it. All right. In researching for this interview, I also found a component called operating income. So what is operating income?
Operating income is after you've done everything and you have, and it's also known as net income.
Okay.
Net income is netting out all your expenses. Less EBITDA, which I won't even get into that. That's another think tank, but that's taxes and other depreciation and all those kinds of, now, we're getting into like accounting 400. So I don't want to confuse our business owner who really just knows their business and needs to have somebody track this for them. But that net income really tells you what you're bringing to the bottom line. And that's what the business, or if depending upon how the business is set up, that operating income or that net income could be passed on, and that becomes the taxable amount that either the corporation pays or is passed on to the business owner, partners, or however the business is set up. It could be a corporation, an LLC, a sole proprietor. In some way, shape, or form, that net income gets passed on to somebody. Or if it's a corporation, the corporation would then have to pay those taxes, pay taxes on that money.
Got it.
But they're not paying taxes on that revenue. Okay, you're going to you're going to deduct your gross profit, your cost of goods. You're going to deduct all your G&A. And we could get in, if you wanted, Candy, to get into some examples of what constitutes the general and administrative, that expense side.
Okay, yeah.
Sure. What made me think of it was I have a client whose bookkeeper was recording their mortgage payment. The business owned property and had a mortgage and was claiming the payment on the mortgage under as an expense. Okay. Now think about it. When you buy a house, right, and you have a mortgage on your house, you have sometimes you have your escrow, but let's just look at the actual payment of that loan. You have the principal and you have the interest. Okay. Yep. So when you get that loan, right, and we're not even talking about the balance sheet here today, but there's another document that reports your bank balances, what you owe, what you might have in assets as far as inventory goes, if all the things that constituted for that pencil, the cost of goods. So when you get a loan, you're going to have a building as the asset, right? And then you've got the loan that the bank gave you to pay for the building as a liability, because now you owe that money. The building is on one side. And again, the balance sheet formula is different from the P&L formula, but that loan now is sitting there. And every month when you make a payment, your statement, your mortgage statement is going to tell you this much of that payment is principal and this much of that payment is interest. Okay. The only piece that shows up on your P&L is the interest portion. The principal will reduce the balance of the loan on the balance sheet. Okay. So like I said, I had a client when I started working for them. I looked in their bookkeeper every month. The mortgage payment got coded to mortgage on the P&L, but it really wasn't that they cannot expense the mortgage payment every month. They could only expense the interest portion. The principal portion reduced the loan amount on the balance sheet.
Got it. Okay.
So there's a lot of things you can also have on your P&L, on your expense section, amortization. So let's say, let's use my paycheck example. When I used to buy paychecks, right, for my company, I would be able to get a discount because I could buy in volume. All right. So the month I bought those checks, I bought really 6 months worth of checks. Okay. I didn't expense all 6 months worth of checks the month I bought them, because that would have overstated my P&L. It would have made my P&L look so out of whack, because 5 months of that expense should be spread out over 6 months. So again, that's where the balance sheet comes in. When I purchased those checks, let's say it was for $6,000 for 6 months worth of printed checks, I would code the full $6,000 to prepaid expense. And then each month when I use those checks, I would reduce the prepaid expense by $1,000, and I would expense on cost of goods $1,000 for the cost of the checks that I used in that particular month. So there's a lot of different ways to, help If you want to, see how well you're performing, there's sometimes you don't, let's say you subscribe to, I don't know, say you subscribe to Zoho, and let's say your annual Zoho bill is, let's say it's $12,000 a year, right?
Okay.
When you pay for that, let's say we subscribe in August. Okay, I'm not going to record $12,000 in August. I'm going to put $12,000 as prepaid. It's sitting on my balance sheet, and each month I'm only going to record $1,000. So then that makes my bottom line look better.
Mm-hmm.
Now it depends upon what you want to accomplish. I mean, if you want to say, and again, I'm not an accountant, so it may be that size of an expense, the IRS would not want you to expense it in 1 month. They would rather you spread it out, and the CPA would kind of look at those things when they're looking at your P&L to figure out how can we save some tax money. They might want to put it all in this year because you had a huge profit. But again, that's down the road. That's let the CPA help you with the taxes. But if you want to see the true performance of your business, I know for me, I do whatever I do. If I spent something and it's for a whole year, like my auto insurance. Auto insurance is 12 months. I break it up, and every month I record 1/12 of my total bill, so that my P&L isn't whacked on the month in which I made the payment for the annual renewal of my car insurance.
It gives you a more accurate representation of the steadiness of your business, where it is, the ebbs and flows, instead of seeing those.
Right.
It almost, if you did do it all in 1 month, you'd almost have to do it with an asterisk. So when you're looking back at that month's P&L and you're like, what happened here? There would be an asterisk that's like, had to pay big bill here.
Exactly. This way here, and I do that with almost everything that's an annual expense. I do prepaid and spread it out over 12 months because I have a better picture of what my performance is each month.
Mm-hmm.
And what do I need to generate revenue wise in order for me, because I have a goal, with COVID last year, we all suffered, we saw some negative months from a financial perspective and thank goodness for the PPP coming in and EIDL opportunities. I kind of spoke fast. I'm talking to Candy, so everybody knows Candy knows that. That's why I picked up my speech. But that helped us through that time. But, in 2021, I said, you know what? I don't want to experience that again. I'm going to make sure that we show a positive bottom line every month. And that's my simple, basic 2021 goal is every month needs to show a positive bottom line, which is that operating income or net income we talked about.
Got it.
And if I don't, and I'm looking ahead, I'm planning ahead. Mm-hmm. And we could talk about that 3-pay month that you and I were talking about before we started. But if you're a biweekly payroll, there's 2 months out of every year where you're going to have to pay payroll 3 times.
Yeah.
Because there's 26 pays, but there's only 24 months. So 2 of those pays are going to be in a month where you've already had 2. So I look ahead, like I know September for my company is a 3-pay month. I'm focusing, and we've been focusing for the last 2 months. What can we do to generate additional revenue in September to offset the fact that I'm going to have 1 more payroll I have to meet and still meet my goal of having a positive bottom line?
So if I sold products, that could be a big month for upsell competitions with staff or servers or any of those things, looking at promotions, things and those like that. So lining up your marketing also with your financial goals for the year. But these things don't exist in a vacuum. There has to be an overall map for the year of goals and how they all align and support each other.
Exactly. And that's where Trainertainment comes in and their business coaching and setting up those weekly meetings and quarterlies and annual planning. We follow Trainertainment system. People First follows the system. It works. It has just been a metamorphosis of our looking at our financials and planning and having those meetings. So I know it's for Trainertainment, but I just want everybody to know that it's an amazing opportunity to get involved and get that coaching in, because it can change your business and you can grow your revenue like leaps and bounds.
Well, of course, we'd like everyone to come to Trainertainment, but whether it's us or anyone else, it's hot. We all have to take the moment to work on your business and not in it. And I know right now for so many of our audience, it's really hard to not even to imagine going back to being able to work on and not in. But if you don't do it, then it's 6 months down the road and you haven't accomplished any of the goals that you set, or you're just going day to day without any goals, which is even worse. And then a lot of times an outside coach or facilitator for those meetings, especially if you're big planning meetings or quarterly and annuals, can give you a perspective that you just can't see because you're so surrounded by it all of the time. Right. It's kind of like my kids, people see them and be like, oh my gosh, she's grown 3 inches. And you don't really notice it because you see them every single day.
Right, right. Yeah.
I just want to recap this section that we talked about. The components that make up a profit and loss statement are, and if I miss any, make sure you tell me, are revenue, your cost of goods sold, you have gross profit, operating expenses, and then net profit. Did I write them all down? Did I miss
net income? Yep. Mm-hmm.
Okay.
Yep. Mm-hmm.
And then, so I'm going to ask a follow-up question to something you alluded to earlier. You alluded to the PPP money and getting it. Where does something like the PPP money go in those 6 components, or does it go on the balance sheet that you're referring to earlier?
It goes on the balance sheet. When we first get our PPP or got our PPP money, it was a loan, right? Mm-hmm. We didn't know if we were going to be forgiven or not, or forgiven 100%. So until we got forgiven, it sits on your balance sheet as a loan to the SBA or to the bank or whoever gave the funding to the operation. Now, the government said that if you got PPP money, okay, and you were forgiven, that was in essence your payroll. You were being reimbursed for payroll. Okay. So what happens if you get forgiven is, and I just look at it this way, and this is me, a CPA may say, no, that's not the way to look at it, but you can't claim the payroll as an expense and be forgiven for the PPP money, because the PPP money was to give you that payroll at the time. So in essence, whether it's the payroll or the PPP money, they're the same amounts. It's whatever the PPP amount is. It really is income because you're claiming the payroll as an expense.
Okay.
If you decide to be forgiven on the PPP money, then you've got to take that payroll expense off your P&L, because otherwise you're double dipping and you're getting to expense it twice.
Got it.
So for me, I kind of show it at the bottom as other income. When I got forgiven, my CPA hasn't corrected me. I let the CPA then deal with how he ever has to do the tax return. But I just want everybody to know the PPP money, yes, is forgiven. But if you claim it that way, then your payroll for that same amount cannot be expensed. It would be a non-expensable item, which would then, it's one or the other.
Got it.
So to me, the money is basically
other income.
I got forgiven for a loan, and so now I have to claim it as income and pay taxes on it. But then I got to claim those PPP, the payroll expenses that I asked the government to reimburse me for. I know it's complicated, and I've had a hard time explaining that to people. Mm-hmm. Sometimes they still don't get it after the explanation, but it's just, you can't do both. You can't double dip. Basically, it's double dipping.
Got it. So what is the difference if you're looking at profit and loss statements and such? What's the difference between cash versus accrual?
Cash is when you report, you don't have accounts receivable, you don't have accounts payable, basically. So let's say, and I know both in Trainertainment's case and People First case, we provide a service and we get paid later. Okay. Mm-hmm. So we have receivables on our books, right? Cash basis is when you get the money in your bank account and you report it as a sale then. Okay. Whereas for us, if I write an employee handbook and I write it in, say, August, I send my client an invoice in August, it is a sale for that handbook in August. I may not get paid from that client because I'm going to invoice them. I always invoice the next month for the previous month's work. So in September, I send them the invoice. The client may pay me right away, or they may then cut checks at the end of the month, and I might not see the payment for the August sale till October. So that's sitting on my balance sheet as a receivable. If I am a cash basis, that handbook that I wrote in August doesn't get recorded as a sale until either September or October, when I get the check in my hand and goes in the bank. So basically, sales are then reported based on the deposits that go into my bank account. And that's the month that I report the sale.
Accrual is the month that you sold it. So you would have that in August if you were an accrual base, even though you may not see the payment until October.
And this likewise with any bills. Let's say we have, we're able to work on terms with our vendors. So the paycheck example, I buy paychecks from a company and I bought them and so when I got the bill, I recorded in August, but I might not pay my bills until, 30 days later. So that would be September.
Okay.
On an accrual basis, I would record the expense in August. On a cash basis, I would report it when I paid the bill in September.
So if you're accrual, you are putting it in on the date that the bill was essentially issued to you.
Or the invoice, correct. And then on a cash basis, I'm reporting it when I actually saw the money hit my bank account.
Okay, maybe a harder question. So pros and cons of both. Like if you're looking at, if someone's looking, we have a lot of clients out there who are looking at opening an entertainment center for the very first time. I would say the most common is accrual, but I may not be correct in that.
It's for me, and to be honest, if you're using QuickBooks or even, I know Zoho Books in my training now, I'm learning how to use Zoho Books, you can switch it from one to the other. I personally like accrual because I like to see when I did the work. I want to record the sale when I did the work. However, my CPA does my P&L, my taxes on a cash basis.
Okay.
So all I have to do is go into QuickBooks and switch it. Now, a CPA may be like having heartburn be explaining it that way, but I'm kind of like the between the CPA who knows everything and is educated, has the license and the degree and everything, and the business owner who knows nothing. I'm kind of in between. I learned all about accounting just in having my own business over the course of the years. But I did have a CPA tell me I knew enough to be like in my fourth year of an accounting degree. So, but I'm not the expert. So, but yeah, so, and it depends. Like, I believe if you have inventory and you're carrying inventory, then you would have to be an accrual basis.
Okay. Yeah.
So there's certain rules that the IRS sets that you would have to report it one way or the other. But yeah, and I just had a meeting this morning with a client who's a cash basis, but yet he tracks invoices and collects money. And so that's really an accounts receivable, because until he gets the money, the client owes him the money.
Got it. I think that you just touched on something that I think we should clarify before we move forward. Big difference. And if you're building my financial team, the difference between a CPA and a bookkeeper, and that a CPA doesn't do bookkeeping and bookkeeping is not responsible for the CPA work. So can you just, in a quick, as simple as possible, the difference between them and why it's important to have both in your corner in the world of business?
Well, there are some CPAs who provide bookkeeping services, so they can be a comprehensive entity. Or like in my case, I just do bookkeeping, but I work with the CPAs. I had a meeting this morning I just met the CPA for the first time with this client, and we work closely with them. When I define the type of client I'm looking, I love to help people. I love to educate. And so I just had somebody refer to me because I said, if somebody is complaining that, oh my gosh, I gotta do my taxes and my CPA is on my case, but I haven't done anything for a year, I got to get myself going. That's the challenge that I love. I love to get the mess and organize it. And I refer to it as untangling fishing wire to get everything straightened out so that the CPA can do what they do best. And that's the tax returns and tax planning. You don't want to just wait until, the extension for corporate returns is September 15th. They were really due March 15th. You want to be planning in advance. So you want to be tracking your expense, having financials that you're looking at every month so that you can go to your CPA and go, this is wonderful. I just made $500,000 in the first quarter. And your CPA can go, okay, we need to do some tax planning. Otherwise, you're going to get hit with a huge tax bill and even some penalties because you haven't been filing your estimated tax payments. And if you're making that much money, the IRS wants you to be paying estimates and will penalize you if you don't. So it's really important to be on track of it. And I know we digress because you wanted to know the difference between a bookkeeper and a CPA. But the bookkeeper gets you to the point that the CPA can do what they do best, and that's the tax planning and the tax returns. They don't do the bookkeeping. They have staff. Mm-hmm. And to be honest, typically they charge a lot more for bookkeeping service than if you had either you hired a bookkeeper or you outsourced it and had somebody like us do the bookkeeping. And we get it all together. We understand enough that we know what the CPA is looking for. And then we make sure that the notes are there. So if the CPA wants to tweak it or make some changes, they can see what we did. Because we know that they're going to look at it and they'll drill down into these, the detail of the P&L, and they'll, and then I typically will meet with the CPA and they'll ask questions and I explain things. And then, but yeah, the bookkeeper is somebody you want to do your day-to-day ongoing. And then your CPA is there for your advisor. You may meet with them quarterly. You may meet with them once a year. I would recommend quarterly so that you can plan so that, yes, we want to give the government all the taxes they should have, but we also want to make sure that there isn't something we could have done to help save us in taxes, that the money can go into a retirement account or, maybe offer something to employees to help the business, help the employees, the business retain employees and things like that. So.
Got it. Okay. So we have a profit and loss statement. It's got the different components on it. Each month when I'm analyzing it and going over it, like what are things, like some top things that you should watch out for in a profit and loss?
Well, I like to, when I analyze them, I like to look at a full month's worth by month. And I can look and I can say, were there really no sales in April? Well, in 2020, that's correct. We were all shut down. You know what I mean? And then you might compare year to year. I also very early on when I started doing bookkeeping, I had an accountant say, your utility bill, you should have a utility bill every month. You should have a phone bill every month. And so I compare and I look and I'll see maybe the phone bill is typically, say, $300 a month. And then all of a sudden I see it's $600 and I realize it got paid, like on the last day of the month, say August 31st for a September bill. So you make kind of some adjustments there so that, again, on a monthly basis, you've got everything you're supposed to have. And you just look and you go, wait a minute, I know there was some travel last month that we visited several clients, but yet there's no airline. What happened? Why is there no airfare for that? Or, just knowing the business and understanding it. And really the owner is the best one to look at it. But a bookkeeper who is working with, the business looks at that first before they even prepare the financial for the owner to review. And then the owner will ask questions as well and go, why is this here? And why isn't that there? And so it then becomes reviewing it every month and sitting down with your bookkeeper is really, it's important. You don't want to wait till the end of the year to find out something wasn't done all year long. So.
Yeah. Wait till the end of the year to find out you've made no money and you could have done something about it or.
Right. Or something didn't get recorded. Hey, we just sold a $30,000 contract last month. Why does it not show it on, so it gives you an opportunity. Nobody's perfect. Mm-hmm. I'm getting into religion, but my mom always says there's only one perfect person. But we do make mistakes and we want to have another set of eyes or, two sets of eyes. I know my staff does the work. I'm the next set of eyes on that work. I catch whatever their issues may have been. And then my client's going to look at it and question me and I'll go like, oh yeah, that should be here. Or I didn't catch that. Or, I missed that. So, and then hopefully after all those eyes have looked at it, we feel comfortable with this is really what the state of the business is for that month.
Got it. Now, as I alluded to earlier, there's a lot of people interested in coming into the entertainment sector right now. We work with a couple of consultants and quite a few new builds are out there. So how soon in the business creation process should people work towards creating a profit and loss? Like, what are the systems that you can start pretty early on, so that when it's time to create the profit and loss statements, like you are already in that cycle? Because it seems like if I went through all this work and then opened and then tried to get all that together after opening, I have so many other things I need to do because I'm open. I'm an open business now. It seems like some of that stuff maybe can be done before I ever open my doors.
I would say that you want to have somebody tracking everything from the day you register your business in whatever state you're in. The first expense that you have that is business related, you should start tracking it. I'll give you an example. I have been involved a few times in jewelry businesses. Okay. In one instance, it was a hobby of one of the owners, and they had equipment that they gave to the business. That has become an asset to the business, and it's a loan from that person. You got some balance sheet entries almost before the business was founded. When you register in your state, I know in Florida, I believe it's, I don't know now, it used to be like $89, but you had to pay the state of Florida $89 to get your business name. If you're using an attorney, attorneys can charge up maybe $1,000, $2,000 to set your business up. Your accountant is going to start, because you need to register with the IRS and get a federal ID number.
Yeah.
If you don't do that yourself, and most business owners don't, they pay attorneys and accountants to do that. You've got expenses from day one. The best thing is to get QuickBooks going and get it started right then and there. And then it's just a piece of cake. I have had experiences where I started working on finances for a business in 2021 that really started expenses in 2018. And in 2021, had to go back and ask and get all that information recreated. There were partners involved. There were investors involved. Who gave how much money? They don't know now, because they were just operating to try and make the business work. Somebody may have tracked it, but nobody had the whole picture. Again, the fishing wire, unwinding, untwining all of the knots that are on the fishing wire. So,
got it. And if you don't want software, it could be as easy as a spreadsheet where you just track every single expense until you get to a point that you're ready to analyze software or whatever. Or because, if you know you're going to use a bookkeeper later on, they may have a preferred software that they use also.
Well, in my opinion, it's being adaptable.
Okay.
I've worked with a lot of different accounting software, because my clients have different software, but they needed my help and my services. Yes, they're all different, but bookkeeping is bookkeeping is bookkeeping. You just need to know what buttons to push. For example, we're converting to Zoho.
Yes.
And that's pretty affordable. I really, knowing what they offer and how much it is, again, I haven't worked with it every day, but it appears, and from what people have said, it's a good product. Now, talk to a CPA, they've never heard of Zoho. And they're going to say, oh no, QuickBooks. And I would say the majority of small businesses are using QuickBooks, and there's online or there's desktop, but, I work with all of them, and I'll be learning another one now. I work with Peachtree. I've worked with, I can't even remember the names because it's been so long that I've only been working with QuickBooks. But again, I learned QuickBooks because I understood accounting, and I just needed to find where do you push what buttons, and YouTube's great for that. So.
Got it. Okay. Those are the 5 questions that I kind of brought into this conversation. Is there anything that you think our audience, like last tips or anything that you want them to like remember and walk away with?
Well, I know I have a whole bunch more, but we don't have time on today's ThinkTank. But why do you use, when would you use a P&L? I can tell you that you want to do this from day one. You want to track, if you're not doing it now, you want to start thinking about it. You want to get somebody involved, whether it's your CPA or if you have somebody on staff who's doing some bookkeeping, but they're not going this far. You really need to track your business, because there's so many reasons why that will only help you, and it'll help you grow. There's planning, there's marketing, there's all kinds of things that you can do as a result of knowing where you are financially at any given point in time.
Got it.
And that's really my advice, is just make sure you're doing it. And if you're not, find somebody who can help you.
And like Barb said, there are lots of other topics in the realm of bookkeeping and financial and things that People First provide that will probably have her back. I've already written like 2 or 3 ideas for future think tanks to have her back to talk about those things. Barb, we end with a signature question. Are you ready?
I am ready.
What do you do to grow yourself and or others?
Well, I have kind of followed in Traintainment's steps, where I have each quarter, my staff has to do one education type top item. So whether it be a seminar, I just had one of my employees join American Payroll Association, which is a volumes of information. She's so excited. She can get certified in payroll now. She can just take their courses. So I do that for my staff. For myself, it's the same thing. I hold myself accountable like I hold them accountable. And actually this quarter, through one of the universities, I'm on their steering committee, and they're having us all take an online digital marketing course, which is totally outside of my, comfort, but it will help me in my business. So I'm always wanting to learn something that's not. Of course, I want to keep up with my HR, my certification with human resources, but and knowledge of accounting. But I also want to do things like, this is going to be digital marketing. This is totally new for me, but always learning. And then obviously reading. I'm constantly looking to read, and webinars, and I have a license and I have a certification that I need to constantly be taking CEUs. I'm going to a state conference next week for HR. I'll be getting 17 CEUs for that week that I'll be up there. So always looking to expand and grow, and with our government and all the programs that come out. We're doing accounting today, but COBRA assistance ends September 30th. The government's requiring notices be sent out to anybody who's been receiving that COBRA assistance. So knowing when those deadlines are, it's just, you got to constantly be on top of your area of knowledge.
I'm sure it's probably been way worse for the last 18 months than it, with all of the different changes.
Pulling my hair.
And the deadlines and the wins and no, that's not a deadline anymore. We're going to actually extend that again.
Right, exactly. That's why I said, well, right now the government's saying September 30th assistance ends, but you never know.
So all I can do is be prepared for that date.
Exactly. I remember when minimum wage. Remember the minimum wage thing that, if you were exempt, your minimum wage had to be $950 something. And then at the people made changes. And at the 11th hour, there was an injunction in Texas that stopped it. Meanwhile, employers had already made changes.
Yep.
So you just.
Well, Barbara, thank you for coming and spending your time with us today. I'm sure people may have questions. And so what's your preferred method if people do have questions and they want to get in contact with you?
Well, I do. Have a phone number, email, text. I have people who send me WhatsApp messages, LinkedIn. It's tough. It's tough to keep on top of all of them. My preferred would be phone call or email. Because those are quickly, sometimes I don't have a chance to go on LinkedIn and someone will message me and go, oh my gosh, I missed that message. So preferred would be email or phone call, but I'm on LinkedIn, I'm on Facebook. I have a client who only communicates through WhatsApp, text messages. So I kind of conform to whatever my client's favorite way of communicating is. But to get me the first time, until I know your habits, it's email or phone.
Got it. Well, thank you to everyone out there for spending your time with us again. And thank you again to our 2021 digital sponsors. If you have an idea for Think Tank, want to be a guest, want to spend some time talking, just email me, candy@traintainment.net, and we will get you on here. So thank you, everyone, and we will see you next time.
Bye, everybody.